Look, we're going to completely change gear now and dive into the digital asset space. Now, markets seem to be hanging on whether or not the US is going to approve a Bitcoin ETF, but we want to look beyond just coins because the digital asset space is much, much more than that. Pratik is an investment analyst with DigitalX and joins me now. Pratik, digital assets, what's the range of opportunities that's open for investors? It's not just all about cryptos, is it?
Yeah, thanks for having me, David. Indeed, there's a range of opportunities in the digital asset space, but I'm going to start with the story about Bitcoin and how it all started. So looking at asset classes, Bitcoin is the only asset class, I think, digital assets as well, that is verifiably scarce with a fixed supply and not controlled by any sovereign or centralized institution. I don't believe there's any other asset class in the world that comes with these properties. Let's look at a couple of other asset classes. Equities, dilution is a problem. Treasuries, you can issue as much as you want, as we're seeing with the governments at the moment. Properties can always open up more land. And commodities, the price is elastic. If the price goes up, then more commodities come into the market because for example, like with oil, you can start fracking and getting more into the market. But digital assets is one where once it's enshrined in the code and has been agreed on by network participants, of which there are thousands in the world, then the rules are there. They cannot be changed. Specifically for Bitcoin, we know how much exists today. We know how much will exist in the next 10 minutes. In the next hour, and for the next 100 years. And arguably, there's no other asset class in the world that comes with these attributes.
How do digital currencies fit into an investor's portfolio? What part of the portfolio are they best suited to?
Yeah, great question. So people would say that it should fit into an alternates portfolio, but we've done an incredible amount of work to do some back testing on digital assets in an investor's portfolio. And I would argue that it should be a part of a core portfolio allocation. So we've done some back testing across 50 different portfolios, your typical 60-40. We had some commodities in the mix, some real estate in the mix. And what we started doing is adding just 1% digital asset exposure across these 50 different portfolios. And the results are incredible. So you would not only outperform any other typical portfolio, but you would also do it with a higher Sharpe ratio and a higher Sortino ratio. So a lot of people are put off by the volatility in digital assets, but the results speak for themselves. Whether you take it out of the commodity sleeve or the fixed income sleeve or the equity sleeve, just having even a minor 1% exposure to digital assets adds enormous alpha to a portfolio. And as I said, I think it should be a part of a core portfolio instead of just an alternate portfolio, just because of the nature of the asset, only verifiably scarce asset in the world, not under any sovereign control, not under, any jurisdiction, just a supranational currency outside of the core, existing system that we have.
How do you navigate risk in that regard?
Yeah, so with risk, in our fund at the moment, we have no counterparty risk at all. All our assets are stored in cold wallets. So we purchase the assets, we put it in cold storage, and it's all institutional grade, secured custody. That's how we do it in terms of security, no counterparty risk. And in terms of actually buying these assets and verifying which one's right, which one's wrong, we've got a very comprehensive due diligence process, which we can talk about later.
Okay. So apart from currencies, what other digital assets are available to investors?
Yeah, so there's obviously cryptocurrencies. I mean, you start off with Bitcoin, then you have the likes of Ethereum, Solana, Matic, and there's a whole gamut of them. Now, all of them are trying to solve different problems, but let's focus on something that's on the tip at the moment, which is tokenization of real world assets. So at the moment, when you go to any financial institution, there's a huge army of middle and back office people. The only reason that it's required is because all of these are in siloed databases, in siloed sort of organizational structures. So having a general ledger that is open to everybody in the world just alleviates all of this friction in the system, so to speak. So outside of just currencies, there's an enormous amount of work being done on the tokenization of assets, which will completely change existing business models, specifically in the finance sector and in other sectors as well.
Okay, so this is the blockchain technology that from an industrial version, not just as a base for currencies that a lot of analysts look at. How are you looking at AI opportunities?
Yeah, so AI has obviously taken the world by storm. So for AI, generally, you need two things. You need data and you need a model. So we're looking at this space with potentially decentralized data plays. So if there's a lot of data that people want to put out and want to get paid for in decentralized fashion, Web3 and crypto is a perfect way to do that. Obviously, it's very early stages for crypto to sort of merge and coalesce with AI. But I think over time, most of these companies are guarding their data behind closed databases and exorbitant prices. And I think crypto will have a niche to play within the AI sector as well. And we're looking at these opportunities, but at the moment, there's nothing that stands out.
Tell me about the DigitalX funds and what sort of opportunity that presents. So this is rather than investors going directly into digital assets, they do it through a fund, get the expertise of a professional manager and diversity.
Yeah, so we've got 3 funds. One is a passive spot Bitcoin fund only. So you just purchase Bitcoin and it's stored in cold storage with institutional grade custody. The benefit for the investor over there is they don't have to log in and manage their own wallets and their own keys and at risk of hacks or counterparty risks. We manage all of that stuff, 0 operational risks, 0 operational problems, all custodied insurance, institutional grade. So that's great. That's only for Bitcoin. Now, our second fund is DigitalX Fund. That is an actively managed strategy where you get the expertise of the things that we do in our team at DigitalX, and we give you exposure to the entire sector of digital assets, not only Bitcoin, but also the likes of tokenization of real world assets, layer 1s, layer 2s, other sort of platforms out there. To talk about it a little bit more, we've got a very comprehensive due diligence strategy in that. Over the last year, we've avoided basically every single catastrophe of 2022. We avoided Luna, FTT, FTX, avoided all the boring lending protocols. So by hiring, so to speak, or deploying funds into a fund like ours, you get that expertise and that lends into the market.
Yeah. Pratik, really appreciate your time. Thank you for telling us about it.
Thanks, David.